What's up, guys? John Howell here. I hope you guys are doing well. Listen, it's a Sunday afternoon here and I've had a pretty busy day. Man, I'm sweating here, aren't I? Forward. I've had a pretty busy day here today. Just really focusing more on looking at my trading and stuff like that, and I want to give you guys a bit of a thought on what I'm thinking right now and what I'm doing with my own trading to capitalize on some of these big moves when it comes to trading. So hopefully this helps you guys out. Guys, don't place a trade based on what you see in this video, because I'm going to give you guys some trade suggestions. You know, the trades that I'm going to put on, they may lose, they may actually not generate income at all. You know, that's just the way it goes. Okay, so just make sure you're being smart with that. Okay. So one thing I want you guys to realize is, or some things that I'm doing right now is I'm setting a portion of my account, about 20% of my account, to trade a certain style of strategy. Okay. Now this certain style of strategy is this. I believe over the next couple of years, we're likely to see some pretty big movement in silver and gold, even the GDX. Make sense? So, you know, and I believe we're likely to get some pretty big movements. Now, I don't know when that's going to happen. I don't know. It may happen this month. It may happen next month. Heck, silver and gold even may continue down, right? Some people think not, whatever. So I'm just letting you guys know what I'm doing right now. With a portion of my account, I'm doing like a wealth building strategy, not like a trading strategy. I'm going to talk about some trading stuff that I'm doing right now that's really working for me, as in entry signals. But I'm just letting you guys, just being completely honest with what I see that works, and it just makes sense. Now again, I'm not telling you guys to do this, but this is something that I'm doing. What I'm going to be doing is this. Over the markets, say the S&P 500, the SPY, SLV, because I like the silver price, the GDX, because I like that price, and a few other markets. I'm going to split up 20% amongst 4 different trades. Okay, 4 main different trades, and these trades that I can see there's going to be huge. There's going to be pretty big volatility over the next couple of years. With me so far? I haven't checked this out yet. I haven't checked the trade out yet, but I'm just letting you know what I'm doing. So over the next couple of years, I'm pretty sure we're likely to get some pretty big movement. So what I'm doing is this, is I'm buying a couple of years. So I'm buying options. Okay, if you guys don't know what options are, I'm not going to go into detail. But as you know, the benefit of an option, it can go to 0, but that only can go to 0. But it can go to 100%, it can go to 1,000%, it can go to a lot more. Make sense? So this is what I'm going to be doing, is I'm going to be finding the markets. It might be the JDX. I'm pretty sure it's going to be like things like SPY, silver, like the SLV price, things like JDX, you know, and maybe 1 or 2 other markets. But it's going to be roughly about 4. I'm going to split up to about 4. And these are going to be like long-term wealth building strategies for me. You know, I might even do 30% of my account. You know, I'm not sure yet, depending on what I'm seeing, okay? But here's what I'm going to be doing. I'm going to buy a couple of years worth of time in my options. About 2 years worth of time. So we're talking like expiring, there's right now, expiring maybe at the end of 2018. Hear me out. I'm going to be buying way out of the money options. So I'm going to buy way above the price. I'm going to buy way above the price a call option, which is going to be cheaper than at the money or in the money. And I'm going to buy way out of the money put option. Now just hear me out here for a minute. I'm going to be buying that, okay? So let's just keep the numbers simple. I'm going to be doing that. So say for example the SLV price. I believe over the next couple of years we're likely to see some pretty big movement in silver, right? But I don't know. This thing could go down a lot more before it goes up. I don't know. No one knows. So what I'm doing to protect myself is I'm buying around a couple of years worth of time. I'm going to be buying way out of the money call options. I'm going to be buying way out of the money put options. Now, let's just keep the numbers simple here for a minute. Just say for example I put $10,000 on a call option, okay, and $10,000 on a call option, and just say for example I do it at say $30 SLV price, right? $30 SLV price. It's going to be a lot cheaper, you know. At the money right now is is around $1 or so, $1.50, somewhere around there. $30 is going to be around 5 cents or something like that. Make sense? Hear me out. Then I'm going to do the exact same for roughly the exact same price for the put option. Now hear me out. I'm going to do that, and that's going to be 2 years worth of time value. So there's 3 things that can happen. One, when that happens, the market dumps, and we get another 10-20% movement on the downside on silver. It may happen. I don't know. If that happens, my call option is basically going to go to zero like that. But my put option, if it does get down to my even close to at the money, my put option is going to be worth 3, 4, 500%. So yes, I lost 100%. I lost 100% on my call option, but my put option now made say 500%. You know, it could make even more. You see what I'm saying there, right? So that's the again, this is a long-term strategy. That's the first thing. The second thing is that the market could take off, and for the next couple of years, we could see a big boom in silver. If that does happen, I'll hold on to that thing, and that's where I could see probably a couple of 1,000% return. If I had $10,000 on the call option, $10,000 on the put option, and silver does actually just explode up and does go up, I could potentially do a couple of 1,000% plus return on that option, depending on, especially if it's way out of the money, right? I'm paying like 5 cents, and now I can sell it, and it depends on how high silver goes. But if I buy something for 5 cents, and now I can sell it for $2, $3, maybe $4, you know, you do the math, right? So, but then the risk in that trade is that the market doesn't know. We just go sideways with silver and gold, right? We go back up again, we come back down again. We go back up again, we come back down again. That's the risk you take in that market. But I'm willing to risk a portion of my account in some markets that I think are going to be really, really, really volatile over the next couple of years. But I need to make sure I'm giving this time. That's the reason why I'm buying a lot of time. So I'm buying like at least a couple of years, let's say 2 years worth of time, and then allowing the trade to do what it's going to do. And if we do get a big boom, guess what? I'm going to capitalize on it. If we don't get a good boom and say on silver or some of the gold or some of the, say, the GDX, if I do this on that, and we do end up going down a lot more, and just completely blindsides everyone, guess what? I'm probably likely to pick up a few 100% on that happens as well too. Now, my theory is this, my thoughts is this: if the market does go down a lot, and I could pick up, say, a few 100% return on my option, on my put option, just say I invested 10 grand and now I can sell it for 25, I'm going to sell that put option, I'm going to sell the put option if it does go down a lot, and so it goes for 250%, right? $10,000 position, now I can sell it for 25 grand. Well, I'm going to sell that, make 15. I'm going to sell that, get my $10,000 back because my whole investment was 20 grand. 10,000 call option, 10,000 put option. If the market goes down a lot, and now my $10,000 option is now worth 25, I'm going to sell that completely entirely, and then actually get my 20 grand investment back. Still have my call options there for the next couple of years, and still make $5,000 there. Make sense? And I'll hold that there. So now I've got my whole investment back, and I can go do something else with it if I wanted to. And now I have that $10,000 position there to hold. And if we do get a big boom over the next couple of years, then that's what can happen. Make sense? So they're just the thoughts that's gone through my mind, guys. Again, there's no guarantee that this is making money, because the market can just go sideways, and that's what you don't want. And, you know, obviously it's not likely to go sideways for 2 years. You know, we're likely to get some pretty big movement over that time, and therefore that's why I'm confident to put like even 10% of my account on one position, 5% on the call, 5% on the put, and allow that thing to roll out. But I just want to let you guys know some things I'm doing. If silver does go up a lot, I can do well. If we don't, and we go down a lot, then I still can do well. The fact of the matter is, guys, is that I need time in this. I need time in this position. Because you don't know how long it's going to take. It may take another 6 months before silver and gold start to take off. Heck, it may take another year, and then silver and gold start to take off. You know what I mean? That's the reason why I need to position myself right now as longer term trades. We're talking like a couple of years with the time frame. Make sense, guys? Plus, I have my in and out. So I was going to get to my in and out, but don't have enough time in this video. But plus, I do that, and that'll be like a wealth building strategy, right? But then I have my short term strategy, like an income strategy, where I'm getting in, I'm holding for 1 to 14 days, and that's sort of an income strategy. but then I'm going to put a portion of my account to that sort of strategy. And if we do get a big boom, if we do get a stock market crash, I can capitalize on that over the next couple of years. Hope this makes sense, guys. I'll talk to you soon.